Hi, do you know how to buy stocks at a discount by trading options? Today, SlashTraders will show you how to sell cash secured puts to reduce the cost of purchasing stocks. We'll talk about 4 key points today. 1. What is a cash secured put? 2. Advantages of selling cash secured puts. 3. Can you lose money trading cash secured puts? And 4. The best cash secured put opportunities right now. A cash secured put is an option strategy that requires holding cash reserves of 100 stocks while selling a put option. Let's check out the profit analysis of selling an OTM cash secured put option. We receive a premium when selling a put. As long as the stock price does not drop below the strike price before expiration, the put option expires worthless and the premium received becomes our profit. The put option will be exercised if the stock price drops below the strike price. This means we are forced to purchase 100 stocks at the cost of the strike price less the premium received. Selling cash secured put options is part of the wheel strategy and a good long-term strategy to buy and hold stocks. In a bullish trend, we can continue to sell cash secured puts for income through premiums. In a bearish trend, we would purchase the stocks at the strike price, which is lower than the original market price, then wait for the stock to bounce back in the future. You might ask, can selling cash secured put options lose money? If the stock price crashes after we sold the options, then the company never recovers to our purchase price or even goes bankrupt. The maximum loss of our cash secured put trade is buying worthless stocks at the strike price. So we only trade cash secured puts on blue chip stocks that we want to hold for a long time. We can use the trending bullish stocks to find a list of financially strong companies that are currently undervalued. The list shows both Shopify and Facebook are extremely undervalued right now. They are great companies with profitable software platforms and huge competitive advantages. Right now, our scanner shows both companies have close to 100% upside from their respective fair values. Plus, the long signal days indicator shows that both stocks bottomed out last week. So we can trade cash secured put options to SHOP and FB to earn income from the premium while anticipating an upward rebound. Shopify's market price is currently around $600. We can sell the cash secured put at 20 delta at $495 that expires next month. The options trade will earn us an income of $19.4 per share. If the stock price drops, we have a chance to buy 100 shares of Shopify at $475.60, around 21% off the original price. Meta's market price is currently around $200. A short cash secured put at 20 delta or $175 that expires next month will receive $3.60 in premium per share. If the stock price drops, we have an opportunity to buy 100 shares of FB at $171.40, around 14% off the original price. Both cash secured puts give us the opportunities to buy stocks at a discount. Apart from the differences in discounts, we also notice the differences in cash buying power required for the two trades. The Shopify trade requires $47,560 of cash to secure each put option contract, while the FB cash secured put option requires $17,140 of buying power per contract. Now you know how cash secured put options work. You can use the trending bullish stock list to find heavily undervalued blue chip stocks, and then use the short put premium to offset the cost of purchasing stocks. If you enjoyed my video about trading options, please like and share my videos, and also subscribe to my channel. Thank you.